Welcome to the How Did They Do It Real Estate Podcast. Have you ever wondered how people succeed in real estate and what steps they took to get there? If so, this podcast is for you. Your hosts, Sayla and Eileen Prack, interview top experts in the real estate community to share with you their real estate journey and how they achieved massive success. Our goal is to provide you with valuable real estate resources and to help you apply it to your own real estate goal. Welcome to today's episode of the How Did They Do It Real Estate Podcast. I'm your host, Eileen Prack, and today we brought on a special guest, Ryan Gibson. He is the co-founder, president, and chief investment officer of Spartan Investment Group. He's helped to organize over $250 million of private equity for Spartan's projects across the country, and he's responsible for the investor relations and raising capital for projects. And outside of Spartan, he's highly experienced in commercial airline flying. So Ryan, welcome to the show. How are you doing?
Good. Thanks for having me.
Ryan, can you give us a little bit more of an insight into your background and how you got started in real estate?
Yeah. So I was an airline pilot for a long time and about 17 years, and truly fell in love with flying and really enjoyed that a lot. And but I also am a salesman at heart, and I loved doing things that advance. And, as Henry Ford says, nothing happens till somebody sells something. I kind of view that as my role in the company and really what I've been passionate about, entrepreneurship, sales, et cetera. And real estate kind of just went crashing right into real estate when it came to meeting my business partner in Washington, D.C. And we started a company as next door neighbors and built a big self-storage platform. And used kind of he had a background in the military, I had a background in airlines, and it really made a nice key ingredients to build a big company. We have about 110 employees now, and we're hopefully going to crest 100 million in revenue this year. So really excited about what we've built, and did it through really kind of investing in the self-storage arena and platform. And along the way, obviously, we needed capital to do that. So we raised capital from our investors along the way. So did the whole transition from W-2 to full-time real estate investor, but also full-time real estate investor to full-time business owner, really. So it's been a lot of fun.
So for you, you've raised over $250 million in private equity. What does it take to be able to raise that type of capacity? And what are some of the things that you need to have in place to be able to sustain that volume?
Yeah, I would say really three things are important. One, you got to have a strategy, you got to have vision. So you have to have some charted course or some investment thesis that you're going to, and a plan that you're going to execute. And I think that attracts your investors to want to do business with you, because they kind of want to know where you're going. They want to know what the destination is to decide if they want to be on that destination with you. That also plays into your employees, and having your employees all aligned with the vision and where you're going as well, so that when you are trying to recruit and hire, you have that strategy, you have that vision to take to go. The next thing you need is a sales force. You need you need a team that can go out and really sell what you're doing. And I think, like I said in the beginning, nothing happens till something sells, or till someone sells something. I think is really important. Not having a good sales strategy. You're not going to, you can't be the best kept secret. You have to get your name out there, and you got to do it in a strategic way. So I think that's really important to do that. And then the last thing is really focused on having like a financial system in place where you have property accountants, good bookkeeping, good record keeping, and a good infrastructure, so that when you are bringing in millions and millions of dollars, 50K at a time is our investment minimum, that you can actually handle the capacity of what you're doing. And those things are really important. And obviously you've got to have an underlying operator or investment that you put your money with. At Spartan, we actually do all of our own operations. We're completely vertically integrated. So we run the construction company, property management, and we run the investment itself. Now, you don't have to have that to raise money. So I kind of left that out of it, but you do have to have a place to put the money. And so an operator is an important piece of that. So really those three things, I think if you're going to do this, I think you should have strategy. You should be able to sell or have a sales force. And then you should have the accounting and kind of finance infrastructure in place in order to support all those things.
When you're starting out, especially in the beginning, as you were building up the business and you're making that transition from the airline pilot into investment to a business owner yourself, what did you have to do first to get that ball rolling, to set that infrastructure in place? And how did you know what was the most important thing to really solidify that foundation?
Yeah. So again, I think the strategic plan is important. I think kind of knowing your investment thesis is important. Like, what am I going to invest? Am I going to go out and do multifamily? Am I going to go out and do industrial? Am I going to do storage? Am I going to do private equity plays? Whatever it is, you kind of got to know what you're going to do. Our first strategic hire was a lady that had accounting and bookkeeping background, because you're not going to be able to go out and get loans. You're not going to go out and be able to handle debt and do your bookkeeping without having sound financial backing. So I think that if maybe you're thinking about starting a business and you're really skilled in that area, so you might not need to hire that person initially, but over time that person becomes more critical, or that team becomes more critical. Now we have, I believe, 5 full-time property accountants on staff, and then we have a controller and a CFO. And it's important that you build up your ability to basically handle financing, because that's what you are. You're becoming a financial shop. And you can also outsource those things, but at some point you need to have a little bit of inside direct employment within those ranks.
You talked about the investment thesis. What are the building foundations of establishing a solid investment thesis, and how did you start it out in the beginning, and did it evolve over time?
No, it changed. Yeah. So investment thesis is a fun topic. So I think it's more about what you don't buy than what you do buy. So when you're thinking about getting to know as fast as you possibly can will help you go faster, longer, versus trying to look at every single deal that somebody gives to you. And the quicker you can figure out how to get to your no, the better off you are. And so I think when you do an investment thesis, people think, well, I want to buy a certain thing. And then they get a deal and they're like, oh, well, maybe that might work. And it's not quite a good fit, but it's a distraction is what it is. So I think having an investment thesis and being okay with that changing, but having a process in which to change it, right? So you want to have key decision-making criteria as to why, like define your why for doing an asset class. We were doing residential development in the beginning, and we were going and buying these row houses and turning them into condo buildings. We were going and buying raw land and building homes and selling those. And it was kind of without a specific strategy necessarily in place. But when we pivoted to self-storage, or wanted to use that as one of our investment vehicles, we had the decision-making criteria, or the criteria of easy to own, easy to evict, easy to maintain. And so we wanted that. So whatever asset class we went into, we wanted to have those 3 criteria met. So I think when you're starting an investment thesis, think about it as what you're going to say no to, as much as it is to what you say yes to, but also have the decision-making criteria as to the type of asset that you would get into, and if it fits your approach. So,
what is the change process that your company usually goes through as you evolve the thesis over time?
Yeah, so we have the strategic planning process, and we actually go through it every year. And what we do is we look at the external environment and we see what's happening. We do what's called a pestle analysis: political, social, economic. I can't remember the rest of them off the top of my head, but basically we look at the full analysis of the market, go through a SWOT analysis of our strengths and weaknesses as a company, what the opportunities and threats are in the economy. And we go through all the team members are super engaged. Hey, this is what we're seeing. Hey, have we looked at this? Hey, have we looked at that? And we kind of get together for a planning meeting once a year, and we really roadmap what we're going to do, and it might mean pivoting the strategy that was already set. And so we do it in 3-year planning cycles. So if your listeners want to download our strategic plan, you can go to our website and you can download a copy of our strategic plan for free. And you can see exactly how we roadmap the next 3 years, our strategic goals and objectives. And, but pivoting off that, you want to make sure that when you decide to pivot, let's say you've gone through that whole process and you decide, okay, I want to do a different asset class, or I want to add a complementary asset class. I think it's really important to learn as much as you can about the space, and also bring in a partner that knows about the space, who's worked in the space for 10 to 15 years. I think as entrepreneurs, we end up at all these conferences and we we bump into a lot of people like us. We're trying to raise money. We're trying to be entrepreneurial. We're launching our podcast. We're getting our name out there, right? We're doing all these things. And I think what we tend to do is make business relationships with people we meet in these types of events, which is fine. They work out great. But I think what's better is if you decide, hey, I want to be a light industrial investor, my thought would be, just thinking off the top of my head, like I'd want to go to Prologis. I would want to go to a big firm that has maybe an SVP or a VP who's really trying to like make the next step up, and try to court them to be my business partner, because that person is going to know way more about the niche and the space than you'll ever learn at any conference over the course of a long period of time. So I think partnering with somebody who's been in the industry for a long time is really important from the standpoint of doing it for a REIT or some very well vetted company.
How did you guys grow your investor base from when you first started to now being able to raise, hundreds of millions of dollars from your investors?
Yeah, you've got to, I think people think about like how to attract investors. I think it's how do you retain them? And I think that's where our focus has gone. And our group has been very obsessive about communications going out on the first of the month, birthday gifts, holiday gifts, touch points, face-to-face interactions, property tours, webinars, education, newsletters, printed newsletters going to their doorstep once a month. You've got to be super engaged with who you have. And I think a lot of capital raisers look at it from like, I got to make this really fancy offering, get it out the door, get the money in, and then I'm good. But really, the investor raise process starts after that. You're really just kind of taking care of the people that you brought in. And then they go, man, these Spartan guys are so buttoned up. Like I get my communication, I get my distribution, I get everything on time, or if I'm not going to get something on time, I know about it in advance. I think people miss that part of it. And that's what breeds referrals, repeat business, and just word of mouth. Hey, how's that investment going with those guys? Oh, we have times where investments don't perform to where we thought, right? Or we have times that they overperform when they thought. But at the end of the day, you're going to hear from us in either situation. So I think it's really important to just really take care of who you have. And don't be afraid to ask for a referral. If you convince somebody to come into your investment and it's going really well, and maybe you're delivering higher than better results, you should almost expect that person to want to share you with their friends. And I think a lot of high net worth individuals run in circles where they like to share what they're doing, right? Like, oh man, I got this group I just started investing with. They're doing such a great job. I want to tell you about it, right? And so I think that's where we put a lot of energy and effort. And that's backboned by a very good CRM. Notes on everybody we talk to, follow up, birthdays, all that tracking information is really critical to kind of keeping up with who your investors are.
Based off of the different touch points that you utilize with your investors in order to retain them and manage and continue to build the relationships, what would you say are the top three that has been the most receptive or the most it works the best for you guys?
Yeah, K1's on time in March. People like that. People love the monthly communications. And I would say face-to-face never can replace it. I've raised more money holding a property tour. And it's so funny, you hold a property tour and it's like, hey, we're going to meet at this property and we're going to walk through it with our manager or whatever. And there'll be the most random people that show up to it that invest a significant amount of capital, because they can see what you're doing. That's why we get into this, right? We get into this because you can touch it, feel it. It's not some Wall Street weird thing where you don't know what's going on. It's Main Street investing. People love that. And so I think consistent communications, K1's on time. I kind of joke about that. I kind of lump that together with like consistent communications, and just kind of doing what you say you're going to do and acknowledging that deals don't go the way that you always think that they're going to go, and just being honest about it. Just saying, hey, we thought this was going to be what it was, and it's not. It's different. And here's what we're doing to fix it. So I think comms, in-person, face-to-face. And if I had to pick another top three, I'd probably say education. People like to be educated. And so not every investor wants to know never every investor wants to be on every single webinar about learning about this and learning about that. But there's a big cross section of the investor base, like the doctors, lawyers, pilots, et cetera, that they want to learn as much as they can. And the more you put it out there, the more you become the authority for where to go to find the information. So
For your current investors and other people in the space right now, is it more difficult to raise the capital, or are people a little bit more hesitant on getting into real estate and investing in this asset class versus, potentially what you've been able to raise in the past and the sentiment prior years?
Yeah, I think storage. So storage has been sort of the has been part of the main food groups of investing, right? It's been kind of the oh yeah, I've heard of that, or I heard a guy that bought one and it cash flowed really well. I think there's been a lot of investors that have come into storage to diversify away from multifamily. I think that's been a big thing, and then also it's been the best performing asset class during the pandemic and really during the last 4 recessions. I mean, 1987, Black Monday, the dot-com bubble of 2000, Great Recession of 2008, and COVID-19, we've had strong occupancy all through that time. And I think when you look backwards, self-storage is probably the most uncorrelated asset you can get into. And it's been proven over time and time again. So I think once people kind of learn about it and they kind of get to know what it is, it makes for a little bit of a smoother conversation.
So for Spartan and for yourself, what is your guys' next focus?
Yeah, so our strategic plan calls for $5 billion in assets under management by the end of 2025, and $1 billion in annual revenues. And what we're planning to do is continue to grow the self-storage platform and raise $2 billion directly from the source. And one of the things that we want to do is we want to get our net promoter score up to over a 50, which is pretty impressive, across all departments. So that's one of our goals. Acquiring the real estate is one of our goals. And then we want to do one private equity play where we actually go and buy another operating company. So those are all laid out in our strategic plan. And for this year, we're focused really on raising capital for our 3 funds. So we have a growth ground up development fund, so growth fund. And then we have an income fund that buys existing cash flowing properties for those that want passive income. And then we have a debt fund. So that's kind of what we're doing this year to kind of get through to stay on track for our 3-year goals.
What does it take to be able to meet those goals that you've set out for the company?
Focus and a reminder of what the goals are. I mean, we put the goals in front of the team every week. They're all over the walls in our office. And what we do is we kind of follow the traction. If you've read the book Traction, we kind of follow that structure. So we have quarterly rocks, right? And so and we have accountable people within the organization for those quarterly rocks that dictate what we're doing that quarter. That is the main focus, right? And for those that know what a rock is, when you think about putting a bunch of stuff in your bucket and carrying it somewhere, you put the big rocks in first. And those are the things that you've got to move, right? Those are the things that are going to be the most impactful to your business. And all the other sand and pebbles and things will kind of fit in between the cracks, but those are kind of noise. And you just got to stay focused on what your rocks are. And so getting those done quarterly basis and an annual basis and by department, I think keeps the departments focused on what they need to do to be the most successful. And I think that's something that we've done really well. And kind of makes us a little bit stand out.
What's a typical regimen? You mentioned you have weekly meetings as well, but in terms of looking at your goals and setting out actionable items, how often are you meeting with the team to start looking at have these items been met to make us get closer to that goal?
Yeah, so we do rock review on a monthly basis, and then we do strategic planning on a quarterly basis. So that the whole strategic team or the executive team gets together, me, Scott, Ben, Whitney, Chad, and Aaron, and now Matthias, and Kevin, actually, we get together on a quarterly basis, but then we also do offsites with our departments. So we have departmental rocks. What is the department really focused on? What is the investor relations team focused on this quarter? It might be overhauling a website, getting the funds launched, doing some kind of property tour initiative, whatever it might be, right? That's their main focus. And that rolls up to what maybe the company-wide focus would be. And so that's a quarterly and monthly meeting to kind of check in with that. But I also think it's really important that we do daily huddles. So every morning we do a 15-minute huddle and we do the one thing that we're working on. That's the one thing for us in our life that's going to make the most impact. And then we talk about what we're struggling with, and we meet. It's about a 5 to 10 minute meeting, and that really gets people aligned with knowing kind of what's going on and where to put our energy.
So what in a scenario if an action item is struggling to get completed and get past that hurdle? What are some of the tactics you guys use in order to help push that along and move it to the next level?
Yeah, that's really important. Well, it's, first of all, is this still the right goal, right? I mean, if it's failing and it's not working, is this something that still matters to the organization? I think that first and foremost, and if the answer is still yes, it might be, do we have the right person or the right people accountable for that? But really, when we do weekly one-on-ones with each one of our team members, and we check in on our rocks and how they're progressing. So, I would say don't let it go, don't ignore it. But if it's not if it's not moving in the direction that we want, it might be time to reevaluate either the rocket in general or who's on the team or helping move it along. And that might be just something that you need to work with your team member.
How do you guys decide who makes a decision on whether or not the rock is removed or not?
It's collaborative. I wouldn't say there's one particular person. I would say that if you've got good, solid reasoning, I think you're going to be approved to make the change.
And Ryan, how has real estate investing impacted your life?
Well, I used to be an airline pilot and I love the job, love the career. And, but the unpredictability in my schedule was, I didn't like that. You knew your schedule a month in advance and that's great, but you didn't know what the next month was, and the next month, the next month. So I think real estate has provided a certain level of freedom to do the things that I really want to do. And I know that's kind of apropos to what everybody says about real estate, your freedom and all that. But what that really means to me is I get to lead a team. I love doing that. I get to use my creative side where, there's a deal that maybe is challenged and I can come up with creative ideas to try to fix it. And it pushes me every day to be better, to lead better, to work with other leaders in the organization. And when I get to meet with great people, and then I love the reward of building something from the ground up. So like when we build a new facility and we see it, turn on, it's really neat to be part of that. There's just a lot of little fulfilling things that happen on a daily basis that real estate provides me that brings a sense of enjoyment. So I would love to say that it's like passive income and all this and that, but I'm pretty damn active. So I wouldn't call this very passive at this point. Maybe someday I'll take a break, but I don't see that in the future very, very near term. So.
And if there's one thing that you know now about real estate that you wish you knew when you first started, what would that be?
Yeah, so I would say, let's see, one thing that I wouldn't want to know. I probably getting back to less about real estate and more about business. I think all the knowledge that I've earned or kind of gained from doing business, I'd want that knowledge to be imparted on me. But I think really, if you were to get into a space that like multifamily or industrial, whatever, kind of going back to find somebody who really knows the assets in and out, who's done it for an elite or very professional organization to be the person that you pick to be on your team. I can't stress that enough. I mean, people always say, work with good people. And, that's what I would tell myself. But, what does that really mean? Because you can be a good person, but not the greatest fit for what you're trying to fill. And I think that in itself that can make or break everything that you do, regardless of what real estate you buy. So I would say the expert in the field is definitely something that I would have strived for sooner in my career.
And what is the one thing that sets the successful people apart in real estate investing?
I think you've got to have the ability to there's creativity. You got to find deals that are accretive, meaning value, day one. I think that's really important. And then you've got to know you've got to have grit to kind of fight through super strong challenges. If you're getting into real estate and you really are like getting into real estate, like developing property or buying and operating it yourself. I mean, there is a lot of grit that goes into that. I mean, just pure get punched in the face, got to keep going kind of mindset, because you're going to be riddled with problems. I mean, you don't do this to enjoy your life on the beach. I mean, maybe you do that someday, but man, if you're getting into this, it's not hard or it's not easy. And I think a lot of people make it look easy. I think social media has sort of helped and hurt us a little bit because you get to learn about what people are doing, but also they make it look so darn easy. And then you get into it and you're like, why isn't this so easy? Like, I see this guy doing it and it's so easy, but I think it's incredibly hard actually. which kind of makes it fun and challenging. So, but as much as you need grit, you also need to know when to quit, because sometimes you might have a deal tied up and it's, you really want to buy it and you really want it to close, and you get to that ninth inning and something happens and you're so committed. There's a really great book called Quit. And it talks about professional athletes who go a little long in the tooth on their careers, and then they get in big accidents, and they should have quit sooner, right? And I feel like in real estate, there's times where sometimes you just got to lose your earnest money. Sometimes you got to walk away from a deal. Sometimes don't be so gritty about it. Like, just let it go. And I think understanding the balance between working really hard and knowing when to stop, I think, is really critical in real estate investing.
Yeah, and totally agree. And to kind of a little add on to that a little bit, it's having the ability to kind of separate the emotions part of it, because at that point there, it's like you're trying to get it to the finish line, and it becomes very emotional because you've been working on a project for months or even close to a year on end. And then to walk away from all that hard work, it's an emotional part, an emotional impact on you as well. Yeah.
And you don't want to lose there's a saying for it. I can't remember. Loss aversion. Mm-hmm. Right. You've got so much time and effort, and there's so much momentum, right? And you don't want it to stop, and and you feel like a failure if you pull the plug. And I think it's a really, really important skill to know just when to just hang it up. And I think you'd be surprised too, if you get it so far along, the seller of a property might be just as committed or even more committed to you as well. And you'd be surprised at how well they're willing to play ball with you if you do get to that point. So I think it's an important skill set.
Ryan, where can our listeners find out more about you and what you're doing?
Yeah, our website is Spartan-investors.com, and my email is Ryan@Spartan-investors.com. You can find me on LinkedIn. I think it's Ryan Gibson 01 or something like that is my link, and catch you on social. So.
Awesome. Well, Ryan, thank you so much for all of your time today. I appreciate the conversation and all that you shared.
You're welcome. Thanks for having me.
And thank you for listening to our podcast today, brought to you by Bonavest Capital. We would really appreciate it if you can go to iTunes right now and leave a rating and written review. Also, please don't forget to subscribe so you can always get the latest episodes. You can also connect with us on Facebook, How Did They Do It Real Estate. We'd love to hear your feedback and any topics that you're interested in for future episodes. Lastly, to learn more about us, you can go to bonavestcapital.com and fill out the Contact Us page so you can speak to us directly. Nothing on the show should be considered as specific personal advice. Please consult your legal, tax, and real estate professionals for individualized advice.